Hello and welcome to episode 2 of the Property Empress podcast. I'm your co-host, Anna Pierce, Property Empress, and I have my lovely husband, Drew, with me today. In today's episode, we are going to be talking about the property market and everything that's been going on in 2023, because we're almost halfway through the year. So we're going to be talking about what has happened for the previous 5 months, 6 months, June, February, March, April, May. 5 months. And then the coming months, the predictions for the rest of the year. And kind of beyond that, we're going to go into beyond that as well. Because I think so many people want to know, especially about mortgage rates, what's going on with mortgage rates. Are they coming down? Are they going up? What's going on?
Is the market crashing?
Is the market crashing? And of course, so property prices. So if you follow me on TikTok, you will know that I've been talking quite a lot about this at the moment. I've been doing loads of juicy research for you, and Drew's here too.
Nice.
I want to know, I'm really curious because I spent hours researching this stuff. I'm really curious to see what your perception of the market, what you're seeing from being in the market.
Okay.
So yeah.
Cool.
Sound good?
Yeah, that sounds good. Let's ask you the questions as you have so diligently put in the research for all your listeners.
This sums up our entire relationship, though, doesn't it?
Well, I'm like a little...
I'm like I like the numbers nerd. Like to go and research it. And I think you're quite good at going with you just kind of go with the flow, but you just quietly observe and learn that way. We learn very differently.
Just see how the market's moving generally, rather than to drill down on the numbers. Because
why would you not want to drill down on the numbers? The numbers are the best part.
Because the pattern is cyclical, and seeing the patterns rather than the numbers is more my thing, I think.
Okay.
But it's interesting at the moment, and you have done a lot of research on it. So. Where should we start? Should we start with the interest rates at the moment, which have recently had an announcement not too long ago, last week, in fact.
It's all that's true, actually. We have, so we've just had, a week ago, they increased rates again to 4.5%, the base rate. So what we've seen is for the last, it's like December 2021, we'd had this long period of record-breaking low base rates. And then I think it was, just before Christmas, wasn't it, 2021? I think that they started increasing base rates. And it was kind of not too much of a surprise, really. But they did start doing it. And you can literally look at the graphs. You can go to Bank of England, like Google Bank of England base rates. And they've consistently been increasing the base rates. We're now at 4.5%. And they reckon that's going to be the last one. Some people say maybe a little bit more, but I think overall people think that's going to be the last one now.
I think the general consensus is they're looking at it quite closely in August this year to, I guess, a couple of months to see how the impacts of the last hike is going to affect the market, and then decide in August whether the three options really are: either it goes up, it stays, or it goes down. But it will be looking around the August time. I don't expect, I don't think anyone expects it to be going up in June.
That's interesting. Why do you say August? Because that was what I was reading as well, that there might be, it's like 50-50, whether maybe another one in August.
Well, I would say it's because it's a quarter of the year down the line, and it's just...
But they've been steadily increasing month by month.
Yeah, but they've also seen how the market's doing as well.
Yeah, because
it's looking at that. It's how the market is reacting to the changes they've already made to decide whether actually do they need to keep making these changes, or is it doing what the increases are supposed to do, which is, give it a little bit of balance.
Because it's very much driven by inflation. So we've had this I was going to say, I don't even know if it's I don't think it is record breaking, but there's very high, over 10% inflation. And of course, the target has been 2%. It was over 10%. Yeah. So that was that's the kind of driving factor behind why they were increasing the base rates to try and curb this inflation. Yeah. And actually, this is very recently that they said, actually, it's finally starting to come down. So yeah, I think you're exactly right.
But I think they expect the 2% to be in or around the beginning of next year, is my understanding. Yeah. So, these guys are really clever, really understand how to move stuff and what they need to do to get it to go. And it's partly to do with, it's really to do with human movement, isn't it? People's reaction and their spending habits. Because if people see the prices go up and the newspapers report that, that's where they see the change in the market. Because if they think everything's going to be more expensive than it was a month ago, then people think, well, if it's not an essential, then maybe it's not something I need right now. So that's kind of what it does, essentially.
Influencing the market, isn't it?
Terms, that's what the job does with interest increases and decreases, is to manage the market. And at the moment, it seems to be doing what it's supposed to. And I think we'll just see what happens. But I mean, what do you think about the property market specifically over the next few months? So if I said they're looking at it in August, what do you expect it's going to do between now and August?
Well, I think so. Over the last kind of 6 months, we've had this interest rate increases. We've had the mortgage rate. Oh, I haven't even talked about the mortgage rates. What's happened? Okay. So basically, this is a good question. I will come back to it. So because they all interweave. So basically, we had the base rate started going up, and inflation was still quite high. So that exactly like you were saying, it was all to try and really kind of stop that inflation or start bringing inflation down. And then mortgage rates kind of preempted this. So actually we saw they actually peaked in November of last year. So November 2022, they went to this kind of peak. I don't even know what they are actually. I should have looked that up. But they peaked then, and they have come down a little bit. I had really interesting conversations with my mortgage broker around this time. And there were a few reasons why they peaked. And one of them being that everyone started scrambling to try and lock in their rates whilst it was going up. Yeah. So he was like, basically, they kind of put them up really to kind of put people off effectively. He didn't put it like this. This is my interpretation of it. But basically, it was just to try and put people off because they were just being inundated. So it has settled a little bit. It has plateaued a little bit. But I've been doing some I'll go on to the predictions in a minute, but basically what we've seen is that we think that pretty much base rates have probably hit their peak, might go up a little bit more, but exactly like Drew said, we're going to kind of see what happens, or that we are going to see what happens.
Us personally are doing that job.
But mortgages, I think, kind of peaked and they have come down and plateaued a little bit. Inflation has started coming down. So the kind of, I think broadly speaking, it's probably going to plateau, like interest rates are going to plateau, mortgage rates are going to plateau. And as the inflation rates start hopefully coming down, it will then kind of, eventually get to the point where they can start bringing base rates and mortgage rates down, but probably not till next year. And I agree. I think you said that the prediction is at the beginning of 2024 that inflation should be it was originally predicted it would be at 2% in like January 2024, but I read something where it might be a little bit later, but we'll see. What was the question again? About property, because you said about
what do you think? Yeah. Well, actually, we stepped back a little bit because we talked about something before we were on air about the market. We were discussing this, where the inflation rate is at a certain point, and you were explaining what the mortgage rate has been in relation to that. So, what has been happening with that, and why is that?
With the mortgage rate?
With the morttage rate compared to the inflation rate, because you said that, what you said to me is that the mortgage rates actually, they went up first before the interest rate then kind of caught up. So what's your understanding of that?
So basically they reduced the because we had after the credit crunch after 2007, they put base rates down really, really low to try and stimulate the economy. So the idea is people go, I don't want to put my money into savings because it's just basically not going to, there's no interest really on it. So I will spend my money. So it's to get the economy going, it's to kickstart the economy. Likewise, it was to encourage people to borrow money. They will give you really cheap mortgages, really cheap loans. So again, for people to take out money to spend. So it's all to try and get the economy going after the credit crunch. The problem with that is when you get the economy going, that is where it can kind of end up tipping into this inflation. So after lockdown or during lockdown, particularly, I have some thoughts, shall we say, on this whole went into lockdown and the government's best advisor said that the property market was going to come down. I'd never thought that was the case. And they chucked incentives at it. So they kind of went whoosh and all the prices started going crazy for 3 years. So basically they were trying to get the economy going on the back of lockdown. But the problem with that is that inflation went high. So as you have all this circulation of money, basically we saw all the costs go up. There are, people think that the Russian war and all that, there's extra stuff that adds to that. But effectively, inflation started going up. So they kind of had to wait to let the economy kick in. It's the balance, isn't it?
Yeah.
The idea was to keep rates low to get the economy going, but then it kind of went into overdrive. So they've had to put the rates up, try and dampen demand, basically. That's my understanding of it. Is yours similar?
I don't know, because we talked about that and you understood it a lot better than I did.
Bearing in mind also...
I thought, I'd be honest, my understanding was it tracked it. When you showed me, it doesn't.
Oh, I see.
I thought that the interest rates were would immediately impact then the mortgage rate, and the interest rate go up, then the mortgage rate would, but actually it's not like that at all. They are independent. Well, I say independent. Obviously, it is based on it to an extent, but I think now, I didn't know this until today when we talked about it, is that actually the mortgage rates were independently managed, because they have, like anyone else, any other experts in finances, they'll be predicting what's going to happen in the market, and they can see that it's on its way, so they get ahead of the game to make sure that they're prepared for when it is. Now, either that is to deter people from investing and borrowing at a low rate, or whether it's to just get a jump on it, so that when it does go up, they're already there and they're already making the money, and actually there's a little squeeze and a few months between the interest rate catching up, that they will actually make more money, I suppose. But I don't know if that's really the reason they do it. But like I said, I didn't realise that was the case until today, so it's quite interesting. You learn something every day.
Well, this is it, and this is one of the reasons I love being on TikTok, because if I say stuff that's not exactly correct, you're gonna hear from the comments. So I've learned stuff like from sharing, and also then people ask me questions. I'm like, I don't know. Like, I never really worried about predictions. No. I was like, market proof your portfolio, so you don't need to worry about it. But obviously when people are talking to me about it, I'm a bit like, I should probably go and find out about this.
But like, we're property investors, so there's always someone out there, particularly financial advisors and people who understand the finance market, who are going to be far better placed to understand why this happens. Mortgage brokers as well.
That's exactly what I was
know
thinking.
This far better than us as investors. What we do is we identify the deals for investment that make money.
And we market proof the port. That's the whole thing.
So it's stress tested at a high level, but really our skills are property investing, not financing, and that's why it's really good. Like one of the huge advantages of a platform like TikTok is that there are financial advisors and mortgage brokers with a wealth of experience and knowledge in this, who have been through this before, can see it coming and know what's going to do. They can then advise us, and advise us for free sometimes as well, if they're just posting in a TikTok about it. It's really helpful.
Well, that was when we were filming the last episode, my mortgage broker was calling. Yeah. And that was because I phoned him yesterday. Rude, not phoning me back yesterday. But
what time did you call? Like 11 last night, something like that?
Probably. We're notorious at calling each other at like 5:05.
Wait until the day's ended and then make contact. So just a quick question.
Like 5 hours later. But I was calling him yesterday because I was doing some videos on the predictions of the property, the mortgage rates, etc. And he's such a good source of information. So yeah, totally agree. So I definitely lean very heavily on my mortgage broker. I do a lot of my own research. Oh, and we probably should have started this whole episode with there's no legal, financial, mortgage or tax advice coming. Go and seek legal and financial advice. But yes, I agree. I think it's, particularly with me teaching, I've had to learn much more than I ever did when we were just investing. It's
not understanding the subject and the market inside out. It's knowing what's going on. It's kind of like current affairs, really. It's knowing what's happening and knowing the people that know.
Exactly.
Yeah.
That's one of those quotes that I love. I think it was Henry Ford that was like, I know everything. I don't personally know everything, but I know someone who will. Yeah. And I very much buy into that. I'm like, I won't know what's going on in mortgages because I don't need to know, but I know my mortgage broker will. Yeah. And I can call him at any time and get his take on it. Yeah. And he also tells me like that he will kind of, he knows me well enough to know that he can tell me the absolute, honest. I mean, not that mortgage brokers don't, but there is an element that they have to be, very professional. And we have such deep conversations about stuff. So I know he will tell me if there's stuff that, it sounds really dodgy, doesn't it? That they're not telling people, but I know that I get the absolute honest truth.
Yeah, there's being sort of tactful in your approach, and then there's just having a very honest conversation with someone that you can trust, and and you know that you can take their advice in return, and understand that they know exactly what they're doing in the market, and they're more experienced than you are. And this is the leveraging your team thing that we go right back to at the beginning of investing in general, is just to have a good team around you who can do the bits, because you can't do it all. Do the bits that you don't have time to, or perhaps not got the expertise in, and being able to do that with a really good financial advisor, mortgage broker for this kind of thing is really, really helpful.
But also, he talks to the banks. Like, he's literally like, I spoke to the Mortgage Works people yesterday, and this is what they've said. I can't have that. No. So, yeah.
My original question about 15 minutes ago was about the inflation rate and what you think the market is going to do between now and August, when, well, what I say August, we use August as benchmarks, quarter of a year from the sort of 3 months from now, to look at what you think it's going to do over the next 3 months, and how that will then affect a possible move up or down in the interest rate. So what do you think about that?
I think it's a good question. I think it's going to be quite boring.
Yeah.
I think that they've now gone, oh, look, inflation. Because there's also a part of me that I'm like, it all feels there's a little bit of a conspiracy theorist within me. And I'm a little bit like, it feels a little bit orchestrated. And anyway, but my feeling is that they've gone, oh, look, it's working. Inflation's coming down. So I think we're going to see a very gradual decline in inflation. So they're just going to hold. I just think that, I mean, I would be surprised if they put rates up again, but I think the rates will stay. The mortgage rates will kind of pretty much stay. I think prices will probably, because we'll kind of come on to the price, I guess, in a second, but prices, I think will be pretty stagnant, maybe a little uplift. But yeah, certainly until August, I think that we're going to be watching inflation gradually decrease. And then eventually everything else will kind of catch up, probably next year.
Yeah, okay, that's good. Yeah, so I think with that, do you want to know what
Yeah, I do want to know what you think.
I think July and August is always quiet in the property market, because it's summer holidays.
Yeah.
And people don't move during summer holidays, really.
No.
So the market always dips, and every single year you see house pricing indexes reports on the newspaper reports for that, always saying that the market's gone down this year, it's gone down, and then they will use it compared to the rest of the year, and it'll either be yet again it's gone down, or it's suddenly gone down, what's happening? And so I'll tell you what's happening, everyone's on holiday.
Yeah.
No one's moving. They're either planning to move in September, or they got it done already back in June. And I think that does play a thing in the market. It does make a difference.
Yeah.
But it doesn't. It just slows it down a bit, and it slows it down every single year.
Yeah.
And every single year you see the same report. But with that probably means that the inflation rate will probably, if it's based, which it isn't, but if it was based solely on the property market, then there wouldn't be any reason to increase it anymore in August, based by just purely the seasonal change in how the market positions. But yeah, that's what I think. I think I think it'll just be quiet until August, and then maybe the market will pick up, maybe it'll be down. Maybe they'll review it in September instead. But yeah, we shall see.
One thing I was going to say that I found fascinating is, you know, I did a post years ago about every year the papers are going, property price is going to crash, property price is going to crash, property price is going to crash. And I did like a few years in a row. And then I looked at, you know, the data on Land Registry, and it showed that they had steadily increased. This was obviously probably sometime between 2014 and 2018 or something. I don't know. Anyway, what I have found really fascinating is that there has actually been a slight drop in prices. Like at the end of last year, beginning of this year, if you go to Land Registry, it was the beginning of this year, wasn't it? You can go to the Land Registry, look at the house price index. There was actually a 2% drop in the average UK house price. And I find it fascinating that when there is an actual drop, I mean, it's only 2%, it's hardly anything, but it's the biggest drop, well, one of the biggest drops we've seen in a while. And the papers they're not fear-mongering. I just found it really interesting that they've said that. So yeah, it'd be really interesting over the summer where they do go, right. It's almost like when it's definitely not happening, they go prices dropping, but when there's a chance it could happen, or there's market uncertainty, they don't report it. It's just, I just thought it was interesting. I think prices will probably plateau for the rest of the year. I don't see why they would crash in the kind of conventional term.
No, I don't know either.
But you never know.
No, you don't know, but it does look like everything is being stabilised around the market anyway. So I guess I don't expect anything outrageous to happen based on any sort of normal circumstances continuing. So what about, as an investor, with the current market, what do you think about getting into property? Is it a good time to start investing?
It's always a good time to start investing. I love this market. So for the last 3 or 4 years, we have been focusing on the rent to rents. We haven't been building the buy-to-let portfolio. This year, I've gone straight in. I've got new angel investors. I'm buying new properties. I love this market because the market like a year or two, well, probably 2 years ago, where people were over asking price, all that kind of thing, not interested. I like the low interest rates, but the market generally I wasn't that bothered about. Now that there's all this market uncertainty, it's a buyer's market again, direct to vendors coming back, like auctions have completely transformed over the last few years. I love this market. So for me personally, people are so worried about mortgage rates, which I understand, but we need to, and it's something we will definitely be covering, is market proofing your portfolio, particularly for interest rates. And this is something I'm talking a lot about on my socials at the moment, about how to market proof against mortgage rates, so that when the rates move, it doesn't influence you and your portfolio. So I love this market. I'm very happy to be buying again in this market. I think it's a great market. I think that you can still get great properties but you have to be in the right area. You have to be in a cash flow area. Usually in the Midlands and North, there are areas in the South that it works, but you have to find the right cash flow area. This is where most people are going wrong in their property investing. But I certainly think it's a great market to start investing, to expand your portfolio. This is what we're doing. Yeah. And if you are interested, I'm doing my buy-to-let course next weekend. So
that's the 3rd of June.
That's the 3rd and 4th of June. It's the online training, but it's giving you everything you need to get started with property investing. So you can head over to propertyempress.com for more information. But but what are your thoughts? What are your thoughts on buying in 2023?
At the moment, it's a really good market for a buy-to-let portfolio right now. I think it's the prices they've dipped a bit this year and it's stabilized somewhat, but it's when it's in this market, this is where you build stuff. And this is, let's face it, your buy-to-let portfolio, this is what we have. It's your baseline investment tool. It's your portfolio is what's covering you, because you're not only getting a passive income. If you're doing it properly, of course, you've got to know that you are buying, you've done your numbers and you should get cash flow. It goes back to what you said about buying the right area that cash flows. It is about having, with buy-to-lets, it's got to cash flow, even under a stress-tested condition. So you make sure that if the market goes against everything that we've been saying for the last 15 minutes and it actually rockets up, that you are still in a really strong position to make money off of your investments on a monthly basis, and you're not having to feed it or pay for it itself. But I would say building up, having that base of properties, the bonus of it is, of course, you'll be buying below market value if you're investing, so you're not paying market value. Any proper investor is finding a deal to put their money in and then looking for it to grow over a longer period of time. Because let's face it, property isn't particularly fast. You can make money. It's not get rich quick. You can make money relatively quickly in certain strategies in property, but still relatively quickly. You're talking probably in a matter of months rather than years. But property is a long-term investment. You should be looking at what's happening 2, 3, 5 years down the line for your investments. And with all the statistics, even when a market dips, it goes back up again. It always goes up in value over time, and eventually it will be in a position where your equity far surpasses what you put in and what the property's worth. So you end up having a lot more invested in there. If you decide to sell or refinance or whatever, the money's there, and you've built money on that investment as well as making a monthly cash flow. So buy-to-let is it's the bread and butter of property investing, and everybody should have one of those portfolios in some way. And at the moment, it's a really good time to do that because the stuff's not moving. Or maybe it'll move down a bit, but it's certainly pretty stable. And I think with what they're doing in the market to control it a little bit. I think it's just going to go up eventually as well. So yes, short answer, buy properties right now, I reckon.
I love it. You said at one point, you said everyone should have some sort of buy-to-let portfolio. And I was like, this is what they need to be teaching in schools.
Yeah, it's there's no kind of financial training really for that. Not in the way as an investor goes. It's always about having savings and stuff like that. But a property portfolio, replaces any kind of savings, bonds, that kind of safe investment. It's like, well,
pensions.
Pensions. But if you've got a property, the value of the property goes up so much faster than a pension pot can. I mean, obviously it depends what kind of thing you've got, and it's tax free. But do your numbers on that and get a portfolio instead.
I was going to say, because I'm smiling because I've been speaking to a financial advisor / pensions consultant or pensions advisor recently, and I'm still, because I was I worked in pension. I mean, obviously, I worked in pensions and then moved to property. Made a conscious decision to move to property. Tried to move my pensions over, but unfortunately, I wasn't able to, just because they're locked in. I've got, having been in pensions, feel a little bit jaded by the whole thing, and I much prefer property, but I'm opening my mind to certainly the tax-free side. Tax-free as a property investor, tax-free is like, like the holy grail, because we get
it does turn your head a little bit. There's a lot of tax issues with property. Do you pay quite a lot of tax, despite what people might have said in the past? There's a lot of tax owed on property investment in various different forms. So it's to have a tax-free option in pension is something to look at as well.
And of course, I couldn't help but ask the pensions guy about SAS and SIPs. And about moving up, because you can move your pension into a certain kind of pension scheme and then invest in commercial property. But yes, there's something for another episode, I think.
Explain that to me, because I don't know what I'm
That's fine. I get asked a lot about it. I have some clients as well who I was doing some research for. But basically, another episode. Is that everything? Have we covered?
Well, that's the market this year. That's what we're doing.
That's the market. The previous 6 months, and then the predictions for the coming few months / years. So I think it'd be really nice on the next episode to talk about strategies that work in the 2023 market, because when there's a big change in the market, you have to reflect, you have to review. Not only, like for us, we have to look at our current portfolio and say, well, how is this working? Is this right for what we're trying to do? But also, like, if you're starting, like, how could you invest this year compared to if you're investing last year? So I'd quite like to look at the strategies for 2023, what works, what doesn't work, and why. There's one strategy that I'm like,
really?
I just don't think works in this market. And you will see, because I mean, landlords, for various reasons, we can touch on all the changes, regulation changes. We need to do the landlord reforms as well. That's just come out recently. So we'll have to do that. Yeah. So lots to cover. So next episode, let's look at strategies, and maybe after that we can look at the landlord reforms. And if there's anything that you want us to cover or any questions you have, then drop us messages.
Yeah, we won't run out of stuff, but it's really nice to know what people want to hear about.
Exactly.
What questions you got. It might be that we've covered a little bit of this today, and it's like, well, what about this part of the business? And we don't know anything about how to do this. So
we need to get you talking about rent to rent at some point. And I want to share more about the buy-to-lets that I'm doing. Obviously, again, head over to propertyempress.com.
How many episodes have we got in this series?
As many as we want.
Okay. We're up to about 8 already on our list we've just made.
We've got more than enough. Like, I think the last season, we had like 11 episodes. I don't know about the previous ones. We tend to just film them.
Until people switch off.
Well, no, it's normally like if something happens. So I think we ended just before Christmas, like season 3. And in fact, I think season 1 ended because I went in hospital, I think. Oh no, I had COVID anyway, but yes. So we will consciously end the season rather than letting outside influences. But yeah, thank you so much. Thank you, Drew. If you want to get hold of us, then your best thing probably is to go to propertyempress.com. I've got a contact form. You're welcome to book a free 30-minute consultation. I do loads of stuff. If you like, I work one-to-one with clients. If you want like private mentoring, I've got my courses. You can also invest with us as well. We work with angel investors. So you can head over to propertyempress.com. There's loads of information there. If you want to contact us, if you have a question or anything like that, then you can email me at anna@annapierce.com or through all my social medias or my websites. And if you want to contact Drew, same, all of the above.
One last thing. Again, we talked about it earlier. You are doing a course next weekend, starting the 3rd of June.
Yes, get started.
And that is,
buy-to-let.
what's the subject?
Get started with buy-to-let.
Buy-to-let. So,
yeah,
exactly what we've been talking about today. So if you want to know more about that and go into real in-depth and understand how to do it, what to implement, how to get started, what things you need to think about, the whole thing. She does everything from start to finish. You will start with no knowledge at all, but hunger to learn, and you will end with all the documentation, I imagine, and any kind of legal paperwork examples and what you need to think about, and how to get your tenants. I mean, it covers
everything, like everything. But hopefully you'll end up with a house with your first buy-to-let.
Yeah. I mean, it's really great for people who are ready to go with a property, because this is like, okay, so I've got a property, then what do I do? And Anna will talk you through it every single step of the way. And that is next weekend. So you can head over to annapierce.com.
No, propertyempress.com.
Propertyempress.com. Do that. That's probably a better idea. Should we do that bit again?
Edit that.
So go to propertyempress.com and there'll be a tab for the buy-to-let course and enrolling on that, and encourage people to go and do that if you are interested in getting going right now.
I like this. I like Drew selling my course. Thank you. Lovely. Thank you so much.
From us,
thanks so much. And we will see you for the next episode, which apparently we're talking about strategy.
Yeah.
So thank you so much, and we'll see you soon.
See you later.
Have a lovely week.
Bye.
Bye.